Hello, everyone. I hope everybody's having a great weekend. So we're here for the market briefing weekend edition for Sunday, April 17th. Quick little disclaimer, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions and not to be considered advice to buy or sell any security. All trading and investment decisions are your own and done at your own risk. Now that we got that out of the way, we can start getting into this. So let's take a look at what we got coming up this week. So starting on Monday, tomorrow, the IMF and World Bank have their meetings, and they continue all week long. So I'm sure there'll be lots of news flow coming out of that. Big economic meetings, and so it should be interesting to see what comes out of that. And that could, that could be a fairly big catalyst for the market if there's any surprises coming out of there. On Tuesday, we've got some minor reports on building, new construction and housing reports. Shouldn't be any fireworks there. On Wednesday, we've got existing home sales. That's a fairly important report. It gives us a look at how the housing market is doing. So I'm sure that one will be closely watched. On Thursday, Jay Powell is participating in a debate at the IMF meetings. It's called Debate on the World Economy. So it should be interesting to see what he has to say. That might be worth a watch. And I'll be posting the time that all of these reports and Jay Powell's debate thing is. They'll all be posted in the morning briefings every day. And then finally on Friday, we've got the manufacturing PMI, the Manufacturing Purchasing Managers Index, and the Services PMI on Friday. And those are usually fairly closely watched. But basically, it is actually a fairly light week for economic data this week. Aside from the IMF and Jay Powell on Thursday, we shouldn't see any major fireworks coming out of any economic reports. What will be big this week is earnings. Earnings season is really kicking off, so we'll take a look at some of the most notable earnings this week. I guess the big two on Monday morning would be, and this is before the open, would be Bank of America and Charles Schwab. After the close, we've got some more banks and whatnot, but nothing really big. Tuesday before the open, Halliburton could be interesting. J&J, Lockheed Martin before the open. The big one on Tuesday after the close, though, is Netflix. That will be very closely watched. And IBM probably fairly closely watched as well. Interactive Brokers might be interested. It's kind of the first of the, really is the first of the brokers. Aside from Schwab, that's in the pre-market on Monday. I think that's about it for Tuesday. Wednesday for the open, Procter & Gamble. Some others sort of second-tier earnings. Of course, on Wednesday after the close, Tesla. Everybody's going to be watching and talking about Tesla after the close on Wednesday, so we'll be watching that too. Alcoa, the aluminum company, might be interesting. We've got one of the airlines, United Airlines. I think it's the first of the airlines to release earnings, and that's Wednesday after the close as well. Nothing else too interesting there. More airlines on Thursday morning. Snap should be interesting on Thursday after the close. Who else? Samuel Adams, beer. Beer is always fun. And on Friday, Schlumberger, that could be interesting, because energy is still in play. American Express could be interesting on Friday. Newmont, a miner. It's starting to get interesting in earnings season. Let's take a look. So we're going to, moving forward from here, we're going to be looking at the major indices. We'll look at some important commodities. We'll look at the sectors, and we'll see if there's any nice setups. Spoiler alert, there really aren't. Okay, let's pull up a chart here. There we go. What do we got here? Oh, we got natural gas. Yeah, I was looking at that. You can see the natural gas is moving up quite well. But let's start with the major indices. Let's go to SPY. So you can see SPY is really kind of grounding sideways, right? As far as the week went, you can see here that on Monday we gapped down and continued down. So that was not ideal. It would have been nice if we had started to move up from there. Instead, we've gapped down and moved down and basically gone sideways all week, although quite volatile, right? So this is Monday. On Tuesday, we gapped up and then we came down again. On Wednesday, we had a very strong up day. I know that on this day, everybody was getting really bullish, even though it was just one day. But it looked like, this was a solid reversal. Bullish engulfing candle here, basically. You can see we were engulfing the body of the previous candle. And then on Friday, we got a bearish engulfing candle. And we see the same bearish engulfing candle across indices, sectors, a lot of stocks. So not good, right? But we're still in a range. We've built this wide range, and as long as we're inside that range, no danger to the downside. However, this does not look, this is not a healthy setup for Monday morning. So we'll have to see how it looks when the futures open later this afternoon. If these start moving down, I think we have to be quite bearish. If we can start moving up next week and start moving out the top of this range, we can maybe start getting a little bullish, or maybe not bullish, but a little more optimistic. So it really up in the air here. If I had to make a call, it would be to the downside. I would have to be, I'm leaning bearish right now. But there is still potential for this to go either way because we are going sideways in a range. So it's really we'll have to see how this plays out. The NASDAQ, same sort of thing. We were talking about how important this level here, this 350 level in the NASDAQ was, and then we gapped down. I should actually draw that gap in there, shouldn't I? So we've got that gap there. So that gap is now partially filled, but still got a lot of work to do on filling that gap. And again, we've much like in the SPY, we have that range, and we have bullish engulfing candle, bearish engulfing candle, and this looks like it's about to lose this important level here, this sort of 338 to 337 level. And if it does lose that level, I think it's an elevator ride down to this 320 to 318 area and testing these lows from earlier. Don't really want to be testing those. So again, kind of leaning bearish on this one, but I'm not going to like this if this breaks down. IWM sort of kind of slightly bucked the trend here. You can see that last weekend we were thinking that maybe this breaks down out of here, comes down and tests the lows and moves back up. Didn't really happen that way. It managed to bottom and sort of turn back up, and unlike some of the other ones, this definitely outperformed the other indices on Friday. So that's good to see. Get rid of that line there, but still work to do. This has really got to start moving up, and it's got the 21-day and the 50-day moving average overhead here, kind of holding it down. So we'll have to see how this reacts on Monday. But this could be interesting. If we start to see small caps outperform here, that could be quite bullish. If not, though, if we break down and we break down through these lows here, then I think we are coming down to test these lows, just like with the NASDAQ testing those previous lows. Another one that was interesting too is the microcaps. This is putting in an interesting channel here, and has similar action to the small caps last week. But this channel looks interesting to me. But if we go farther out and look at a weekly on this, to put this channel in context, you could almost call this a bear flag. I'm not going to, but we do have to be careful about a breakout of the bottom of this channel, because if this does break out the bottom of this channel, there's not much to hold these up until we get to the 200-week moving average. But I think more likely area of support is going to be down here in the 90, the 100 area. So I mean, you're looking at a 20-25% move to get down to 100 here. So hopefully we don't see that. Let's just keep moving up here and move out the top of this consolidation would be the ideal scenario on the microcaps. So moving into commodities, we'll start with gold. And we were last weekend thinking that gold could break out the top of this little consolidation that it had, and sure enough it did. So if anybody was watching that closely, that might have been a play in that for you. But it seems that now we're consolidating again. We've got a little bit of a minor resistance or pivot level right here. We want to see it break out of the top of that now. So it's definitely got some work to do. But it's interesting, if we look at the gold miners, and so we're looking at the GDX ETF, which is the gold miners, and that has broken out quite nicely. And seems to be continuing higher. So, are the miners leading gold? They kind of have been, and they continue to from the looks of this. So, just going on what the miners are telling us, we should see gold move higher. Copper is another one that we've been watching fairly closely. And it had a bad day on Monday, big move down, but it recovered immediately. And so this uptrend in copper is still intact. We may need to move this down to here now, maybe adjust that a little bit. But I mean, we still have an uptrend, but we want to get out and break out above this. So we've still got some work to do. It'd be nice to see this move up here and consolidate, run under this line, and then break out. Freeport-McMoRan is sort of the gold miner that I watch closely. And that, it consolidated a bit on Thursday, had a move up, tried to kind of break out of that consolidation range. I should probably draw that in as a base here. Oops, that's not the one I want. There we go. Yeah, so we had a nice little base there. It tried to break out of that and pulled back in. Don't like to see those selling wicks on these candles. I'm just actually going to adjust this up a little higher there. There we go. And it's pulled right back down to the base. So we'll have to see how this goes. If this comes back inside, I guess it's going to need more time to consolidate before it's ready to break out and go attack these all-time highs up here. But still worth watching on copper and Freeport-McMoRan. Uranium. This is the Sprott Physical Uranium ETF. You can see this one almost looks like it's rolling over a little bit here, but we are coming into some support. We've got the 21-day moving average. We've got a support level here, which we should probably draw in. Right there, nice little support level. And it kind of bounced off that on Friday. So, this looks ready to turn up. And when we look at some of the miners, some of the uranium miners, we'll see that, they're looking pretty healthy as well. Still continuing to grind up. That's Cameco. We've got Uranium Energy Corp. That had a nice little breakout on Wednesday. I know I've been saying Friday, haven't I? This would have been Wednesday. Minor pullback on Thursday. So that looks like it could continue. URA is a uranium miner ETF, and that is continuing to grind higher as well. DBC, sort of a more general commodities ETF. We were looking at this. Triangle that was formed as part of this uptrend. We were looking at that last weekend. And sure enough, that broke out on Tuesday and continued higher through the rest of the week and is now coming in very near all-time highs on that. So it'll be interesting to see what happens there. If anyone was watching this closely, hopefully you managed to get a trade in this. But this definitely looks like it's going to continue higher. Still very bullish on commodities. I think that's where all the money is being made in the markets right now. DBA is the agriculture commodities ETF. And this one also had a breakout, but not a lot of follow through on this. So, maybe this just needs to consolidate above this breakout level before it moves again. But still worth keeping an eye on. And MOO is the agribusiness ETF. And still kind of consolidating here on Thursday. Tried to break out and pulled right back in. So we don't like to see that usually. But, nothing terribly bearish going on here either. It's just, it's just digesting and consolidating in there. Some of the specific agriculture ETFs, like the corn ETF, still moving nicely higher. And I know I can't remember which day it was, but there was news about ethanol limits in gasoline being raised. So that's good for corn as well. Use a lot of corn to make ethanol. So if there's going to be more ethanol in gasoline, corn prices should continue higher. Soybeans, they're sort of, consolidating a little bit as they try to move higher. And wheat, also kind of, moving higher, consolidating a little bit for a few days there. Let's extend this line across, see if this pulls back, to that sort of resistance that we had here. Maybe a pullback here and then turn up again. Might be a way to play that. Where to next? Okay, yeah, let's look at some of the individual sectors now. Where's my FinViz? Here we go. So these are the major sectors within the market that we watch, and we can see on Thursday, was a red across the board, with technology suffering the worst relative performance, and communication service the second worst, and then consumer discretionary not doing well either. So just a big red day on Friday. If we look at the 1 week performance of all of these sectors, we can see that energy at the top of the list, followed by materials. So these are your commodities doing well, right? Consumer defenses, these are your staples. The only other green sector for the week. And then, as we move down through these and look at the bottom, technology is just not doing well at all. Same with communication services. Healthcare, that had been doing well, did pull back a fair bit on the week. So, maybe that's given us a chance to get in, maybe not. We'll take a closer look at that in a few minutes. So let's move into some of the sector ETFs and see if there's any individual names with in any of those sectors that might be worth having a look at. So this is the healthcare ETF, and you can see that you can see why it had a terrible week on Monday. Big red candle on Monday, and that's not what you want to see after a nice big move up like this, right? We had this the prior week. We had this nice big move up. It broke out to new all-time highs here, and then on Monday pulled back really hard. Tuesday pulled back some more, and is maybe consolidating in here now. So I think this is going to need some time to digest all of this. Bigger picture though, it did have a really big move up, so maybe a little pullback and consolidation, not so unhealthy. Pharmaceutical companies within healthcare, they had a very similar move. Looks like it needs more time to consolidate sideways here. AstraZeneca, I know we were looking at last weekend. It had a very similar move as well. So maybe this needs more time to consolidate before moving up. Kind of on the fence on this one. Biotechs, still not really looking great. They tried to come up to, try to make a new all-time high here, or not all-time high, sorry, a new swing high. and failed to do that and have pulled back. They do appear to be trying to make a higher low now. So if these can make a higher low and come back and break out to a new swing high, that would be great. But right now, kind of in no man's land. It's just kind of going sideways. What do you do with that? All you do that is basically stay away. Is the only thing to do there. We talked about IHF. Healthcare providers being an area within healthcare that we could look at because this did had a nice breakout, but it failed to follow through as well, just like healthcare. Although I will say that it did come down to the top of this base that it had built and bounced off of that. So that's quite healthy. What's not healthy though is this red candle, this inverted hammer here, or shooting star, we would call that. Not a healthy looking candle. So again, kind of on the fence here. Which way is this going to go? If this starts to move up, excellent. That's what we want to see. If this starts moving down and comes back down into this space, then we've got to start looking and seeing, does it find support at the 21-day moving average or does it find support at the bottom of the base? Again, on this stock is on the fence, and so am I with this one. Okay, let's look at consumer staples. Consumer staples had a really good run. Not really what we want to see, because this is a very defensive sector. If consumer staples are doing this well, then the market is not doing very well. But again, we have this shooting star here, this looks like it could come back into its little base. It's a bit of a failed breakout. Maybe it consolidates up near the top of this level here for a bit and then breaks out again. But again, it's staples. It's not something we want to see, breaking out and running away. Utilities. So utilities had this nice bull flag here and a solid move up, and really it's drawn another bull flag. Now it failed on the original bull flag. It failed to meet the original target. So we could, modify our target on this. We'll look at from that breakout point to the top of this flag, and if this flag breaks out to the upside, where do we expect that to move to? So kind of depends where it breaks out from, but we can raise our target up here, up into the 82, 82.50 area on that. Should this flag break out to the upside, and there's no reason to believe that won't. What's not ideal is this is utilities, another very, very defensive sector. So if utilities are doing well, it doesn't bode well for the rest of the market or the stocks that we really want to see do well, which is our growth stocks and our tech stocks and that sort of thing. The utilities are the anti-tech stock. We'll look at some more anti-tech stocks in a few minutes as well. REITs, another defensive sector. They were down a little bit on the week, and that's because home builders and the residential housing sector is not doing terribly well. A number of those companies are rolling over, and if you're involved in real estate, I'm no expert on real estate, but this does look like if REITs are holding over and home builders are rolling over, we're probably going to see the real estate market start to slow down again soon. And with mortgage rates and everything going up, that wouldn't be a big surprise. Okay, energy. We got a lot going on in energy still. So this is XLE, the energy ETF. And you can see that this kind of tried to break out. It's a bit of a grind here, but the uptrend is still very much intact. Didn't get a ton of volume on this breakout. It's not very convincing, but I think when we look at, when we look a little closer at some things, you'll still see that it really looks like energy is the place to be. Here's crude oil. And we can see that, the energy ETF has been outperforming crude oil, except that in the last few days, oil's had a really strong move. It's kind of trying to retake this trend line that it broke down through. And looks like, this is going to continue higher and move up. We'll watch this 115 level here and see if that's going to be resistance or not. But it looks like we're due for a test this week of this 115 level for sure. XOP is the ETF that covers oil and gas exploration and production. So these are where your big oil companies are, and you can see that they broke out of this little base a couple of days ago. Again, not terribly convincing on this breakout. And look at this volume. Look at the volume declining on that breakout. Not really what you want to see. We've also got a really minor RSI divergence here. You can see that we have broken out to a new high, but RSI has not broken out to a new high, although this is a really minor divergence. Oil services ETF is looking healthier. This breakout here does look a little healthier than the last one we looked at, but still definitely has work to do. This uptrend is still nicely intact though. You can see as we pulled away from the uptrend a little bit and then consolidated sideways, that's very healthy action. So I have no reason to believe that this move up won't continue in the oil services ETF and those companies. We'll look at some of these companies. So ExxonMobil is in the producers, exploration and producers. We can see we have a little breakout there. It's small, but there's definitely a breakout there. We've got Occidental Petroleum, not as healthy looking, but still not bad. It's consolidating some recent gains. It had really big gains here when I think this is sort of when the word came out that Buffett had bought this. Devon Energy. This one looks ready to break out. Again, having a little trouble with these breakouts, right? Marathon. This one kind of broke out of the base, but again, having trouble. So when they're having trouble like this, if they do get going, they could move quite suddenly. But if they do start to break down to the downside, they could move suddenly to the downside as well. And we're just seeing a lot of this indecision across, everything we're looking at today, right? So that's information in itself. That everything seems to be going sideways for a few days is definitely information. Schlumberger is one that is quite interesting. We have this pennant here, and on Thursday broke out to the upside and fairly convincingly, and we have some rising volume here. So I think this is definitely worth watching, and this is in that oil and gas equipment services. So that was the one, the ETF that we thought looked a little better. So we can't leave. We can't leave energy without looking at coal. Now, I know you've seen me talking about coal in the Discord, and we've got to look at it. Unfortunately, it seems ridiculous to me, but it is what it is. So here is Arch Resources. Look at this beautiful breakout. Of everything we've looked at so far, right? This is the best breakout that we've seen. Very nice breakout out of that consolidation, and has broken out to a new all-time high, or is sort of right at that all-time high or just above it. Let's see if that continues next week. It's kind of hard to get into up here though. I guess what would be ideal is to see some sort of pullback here, and even if it was just a pullback to that, even a pullback to this pivot right here, or a consolidation right around here and then move again, might be a way to get in that. BTU, another coal company. That is broken out of this slightly ascending triangle, and you can see this nice uptrend here. So, this one is now accelerating to the upside. Too late to get in. Like I said, same with, same as Arch there. If it pulls back maybe down to this trend line or this support level here and then continues higher, that might be a way to get in this if you want to play coal. And CEIX, really nice breakout. I had highlighted this base in the Discord, and it has broken out of that quite nicely now. Big 3-day move. So, probably due for a bit of a rest because it's moved almost 25% here. Or certainly 25% in the last week, from the bottom of this hammer candle right here, easily 25%, 30% even. So big move there. Needs a rest, but probably has another leg up coming. There's nothing here that's telling me that coal is slowing down. Unfortunately, maybe coal is the new GameStop. I don't know. Financials, nothing exciting going on in financials. I mean, I guess unless you were short, definitely seems to be breaking to the downside. Is trying to find, we've got these Fibonacci levels here, right, from this low here, and it was trying to support at that 236 Fibonacci, and it looks like it's breaking down. And if this breaks down, we're definitely coming down and testing this level from back in March. So yeah, the financials are not exciting. I know we were looking at JP Morgan is one that I had a trade in. That trade did not work out. Their earnings kind of sucked. But it was a very risk-defying trade. Really minor loss on that. No biggie there. But, this has basically taken all the other banks with it. So, unless some of these banks who have earnings coming up can turn it around, the banks themselves, the bank ETFs, and the financials ETFs look to be on their way down, unfortunately, and that does not bode well for the general market. Technology. Technology's kind of stinky here, isn't it? That broke down this week. You can see we gapped down on Monday and continued down, and we tried to consolidate, and this looks kind of like the indices, except that we have this bearish engulfing candle on Thursday, and we broke down below those two lows there. This really looks like it's going to continue lower. Does this sort of 144 area support? Does this old downtrend line, does the top of that downtrend line support? Do we come down and test these lows here? We've got a we've got this sort of support zone right around here. I'm actually going to move that up a little higher. There we go. That looks better. We've got a zone of support here, and that should be fairly strong support. So we'll see. I don't know. It looks like we're coming down over the next week or two. It looks like we're going to come down and test this zone. And we really want to hope that supports, because if that breaks, it means we're going much lower, probably into the 130 area on this ETF. So that's another at least 10% down. So we don't want to be looking at that. Let's look at some of the communication sector. Pretty much the same thing. Looks like it's going to come down and test this support area if this breaks right here. Facebook. Nothing good happening at Facebook at the moment. It looks like it is, or it has rolled over. Failed to even go up to the top of the gap here. Why don't I get? Well, we can draw this gap in, but it's going to be a giant, ugly gap there. Okay. Yeah, at some point this has got to go up to start testing this gap and working off that gap. But for the moment, it has rolled over, and there's nothing to say this is going to stop going down anytime soon. Apple. This is scary, this one. Apple had, looked like the rest of the tech, but ugly bearish engulfing candle here, and it closed below that previous low right there. This looks ready to come down and test either the 200-day moving average or this very long-term uptrend line. This is not good because, I mean, Apple's been one of the stars. Apple's been one of the stocks that have been holding up the market. If we see, Apple, and, when we're seeing stocks like Facebook roll over, Apple roll over, if Google's rolling over, these are big stocks. We're going to start seeing this in the major indices. We're going to start seeing this in the SPY and the Qs. And that's going to scare people if they start breaking down. So this is not the price action we want to see in Apple. So fingers crossed this can reverse. Amazon. Amazon had this on Wednesday. Beautiful bullish engulfing candle. And right off that trend line, right? See this, we had this previous downtrend and we came right down to it and we were finding support. It broke below the previous two days lows and then immediately turned up. Gave us a really nice healthy green candle. Closed above the 50-day moving average even. So this is great. I mean, at the end of Wednesday, if you weren't bullish here, there's something wrong with you. You should have been really bullish there. And then what happened? On Thursday, it turned back down. So that's not good. Couldn't follow through. Not what we want to see. Netflix. So remember, we've got earnings on Netflix coming this week. I think it was Wednesday, if I remember, or Tuesday. So this, this is rolled over. Looks like it's coming in to test the lows. We'll have to see what happens with earnings. I doubt that it's going to break these lows before earnings, but if earnings aren't good, then it's probably going through. It may even gap down through those lows. And where do we come down to if that happens? We probably come down to the 285 area. So there's a lot of room for this to move down, but there is also should be a fair bit of support in this area as well. And on the way back up, if earnings are good, the first area we want to watch out for resistance is somewhere in here, in around 395, just under the 400. Is an area we want to watch for on the upside. Let's get that drawn in. Yeah, just under 400. So that'll be a zone, up to 400. And then above that, if we can get above that, minor level right here around 413 or so. But the big one is going to be this gap fill. What happens on that gap. But it's going to need really strong earnings to even get, all the way up here and start testing this gap again. Google is looking like it is do or die time as well, right? This is a really important support level at 2,500, and it certainly looks like we're coming in to test it. So if 2,500 fails, I mean, we should see a bounce here. And maybe a bounce here is the catalyst that gets the rest of the market and the rest of the tech sector going. The flip side of that is a break here is definitely a negative catalyst on the whole market and the rest of tech. If 2,500 breaks, does 2,400 hold? That's what we'll be watching for. Okay, what else? Oh, Tesla. Another one that's looking like, we need to see some positive action out of Tesla here. So we had this nice move up. And, you can see the week before last, we had this nice breakthrough, this previous pivot level. But then it pulled right back in, and it's been moving down ever since. Gap down with the rest of tech on Monday. Zoom in a little more here. But now we're drawing, kind of had a similar candle to Amazon, on Wednesday, and then had an inside day on Thursday. So it's got this base here, right at the 200-day, this is the 100-day moving average. So that is supporting it so far. We want to see it, even if it just went sideways in this space, that'd be fine. We do not want to see it break out the downside of this space. If it does, maybe we look to the 50-day moving average for support. But we might have to come down and test this sort of 875-ish area, or the 200-day. You know, we've got the 200-day moving average at around 889 right now. So that is a zone we would look to look for support if this breaks down out of this consolidation. You know, it's Tesla. You know, maybe it starts to take a turn up here. We'll have to see. What else we got? Semiconductors. Semiconductors look ugly. We've got that low from earlier in March, and it looks like we're going to come down and test that probably on Monday. And you know, below that we don't have much going on. You know, we could get into some really dangerous areas here. I need to draw this line in. Yeah, it was a line I was hoping we wouldn't have to draw in here. But yeah, this 222 area on the semiconductor ETF, right below there, it really starts to get ugly. So these semiconductors really got to get up off the mat here and start fighting back. Because I don't like what we're seeing here. I'm not even going to look at any of these semiconductor companies. They all kind of look like this. Consumer discretionary. You know, it was looking really hopeful here, but it's started to break down, and we've got some consolidation going on. May need to adjust some of these levels a little bit. I think let's got that up to there. Yeah, we can tweak that one up a bit. Yeah, this has got to hold and start moving up. But there's kind of some stuff going with. There are some good companies within consumer discretionary. This is the retail ETF. And it doesn't look like it's doing much, but you know, we should kind of draw in some of these trend lines on this, because we can start to see, you know, a little bit of a triangle here. And you know, we'd like to see a break to the upside of this. We do not want to see a break to the downside of this, obviously, right? But this is something that we should definitely be keeping an eye on. And then if we look at some of the companies that are within this, or some of the retailers that we're familiar with, this is Dollar Tree. This is I pointed this out last weekend, and this is just been a monster. And this uptrend here is accelerating to the upside. So it may need to chill out a little bit, or it may continue to sort of create this hockey stick here and just keep moving quick to the upside. Some of the other retailers, Costco, chilled out a little bit this week. But every time Costco chills out, it just keeps moving higher. So this may be an opportunity if you dare get in this for a continuation of the move. Target had a really good that's right. Yeah, Target, went in depth on this on Ticker Talk on Thursday. So you might want to go and watch the Ticker Talk video or the Target portion of this. This is bookmarked in the playback, so you can go right to this. But this is interesting here. Nice bull flag and nice healthy upside target on this. So you can still get in this. An entry. You can see how I marked up the entries for the bull flag. But a late entry on this would be a breakout above Thursday's high. So you could look to get in just above Thursday's high, and you would have to put a stop below Thursday's low. But if it does continue higher, you can start tweaking that up a little more. One way to tweak that up, if this continues to move, you could maybe tweak that up to, kind of halfway across Thursday's candle, and then just start following that up with a stop. But initially, you're taking a fair bit of risk here. What are we at? 38.50 down to 32.50 kind of risk. So you just, you'd size your position accordingly. But I think out of everything we've looked at today, this is probably one of the best plays in the whole market, is playing this breakout on this flag, for a continuation higher. Walmart got kind of messy. We've got some big red candle, and then we've got a big green candle, and then on Thursday, indecisive candle. Walmart could be played on a breakout above this level here. but I kind of like Target better. What else? Last weekend I pointed out PBJ, the food and beverage ETF, and that's still consolidating here. Just sort of poked its head above the breakout level on Thursday, and pulled back in. But this is another one that still looks pretty good for a breakout, because this is a nice flag, and this sets up a really good target. Let's get that drawn in there. If we go from here to here on this flag, and just duplicate that guy, that's taking us way up into the mid 50s. That's not, for a kind of a sleepy ETF, that's a pretty decent move, from 48 up into 53. So that could be worth a play. That move is not going to happen overnight. It's going to take some time. You're going to be in that for a month, probably waiting for that move. But looks worth a play in a market that's not giving us many plays. This is a play that might be worth playing. Last couple here, industrials. Not much going on here. Could go either way. It's kind of in no man's land. And we already looked at utilities. I think that's all I've got for you guys today. So why don't we go back to see what we've got coming up. So coming up on this coming Thursday, I am doing another options session. We're going to be looking at spreads. So bull and bear spreads. We may touch on credit and debit spreads a little bit, but that gets a little more involved. Might split that up into two separate sessions. But definitely looking at spreads on Thursday. That's at 5 o'clock Eastern. And the following Sunday, so Sunday the 24th, Nick will be doing a live session, Bring Your Tickers session. It'll kind of be like a ticker talk, except using fundamentals. So that should be really interesting. I know I'm looking forward to that session myself. So and maybe I'll be able to fire a good one at Nick. So watch out for that too. So that's all I've got. Enjoy the rest of your Sunday, and we will see you next week.